Hello traders, welcome back to my channel. In this video, I'm going to teach you candlestick psychology from beginner to advanced, especially how it works in the OTC market. Most traders lose because they memorize candle names, but they never understand what the candle is actually saying. Also, I give free trading signals in my Telegram channel, the link is in description. So make sure you join, and now let's get started. What is a candlestick? A candlestick is simply a way to see price history. Each candle tells us four things: open price, close price, highest price, lowest price. But understand this clearly, a candle is not magic. A candle is a battle between buyers and sellers. Every single candle answers one question: who had more pressure, buyers or sellers? There are two types of candles, bullish and bearish candles. First, what is a bullish candle? A candle is bullish, green, when the closing price is higher than the opening price. This means buyers had control. Green color does not mean buy. It means buyers were stronger during the time. Bearish candle. A candle is bearish, red, when the closing price is lower than the opening price. This means sellers dominated. Red color does not mean sell. It means sellers won that battle. Now let's break a candle into parts. Body. The body shows the real fight. Longer the body, stronger pressure. Smaller the body, confusion or manipulation. Upper wick, which is the head of the candle. Upper wick means price tried to go up but sellers pushed it back down. Upper wick always shows selling pressure. Lower wick, which is the tail of the candle. Lower wick means price went down but buyers rejected lower prices. Lower wick always shows buying pressure. Candles move because pressure enters the market. If price goes up but closes near the low, selling pressure entered strongly. If price goes down but closes high, buying pressure absorbed everything. Always focus on where the candle closes, not where it travels. Till now, we've understood the basic structure of candlesticks. But let me be very clear, that knowledge alone is not enough for trading, especially in OTC markets. Because when it comes to OTC, candles don't behave the same way as in live markets. OTC markets don't respect textbook candlesticks. Here, candles move faster, fake moves happen more often, and psychology plays a much bigger role. So from this point onward, we won't just study candles, we'll understand how OTC candles think. Now look at these bullish candles. All of them are green. All of them are bullish. But each one has a different psychology. And this is where most traders lose. Now let me explain one very important candle in OTC, the Marubozu. A Marubozu candle has a big body and no wicks. That means price moved in one direction only. A bullish Marubozu means buyers controlled the market from start to end. But here is the most important OTC rule. A strong candle does not always mean continuation. In OTC markets, when a bullish Marubozu forms near resistance, it often acts as an exhaustion candle. Buyers use all their strength, late traders enter, and smart money starts selling. So instead of continuation, price stalls or reverses. So never chase Marubozu candles in OTC. Use them as confirmation, and always respect support and resistance. Remember this line: strong candle at the wrong place is a trap in OTC. Now let's move on to next candle. What is a bullish tailless candle? A bullish tailless candle is a green candle with no lower wick. In a bullish candle, head is always at the top. Tail is always at the bottom. When there is no tail, it is called a bullish tailless candle. The structure of the candle is candle opens at the bottom. Price moves upward. There is no movement below the opening. Candle may have a small upper wick. Candle closes above the opening. Many traders think the wick is selling pressure. That is wrong. Inside a wick, both buyers and sellers are present. A wick alone does not confirm buying or selling pressure. That is why confirmation is always required. In OTC markets, price moves fast. A bullish tailless candle shows strong momentum. It often appears during trend continuation. Strong buying phases. Now let's understand the bullish headless candle. A bullish headless candle is a green candle with no upper wick. In a bullish candle, the head is always at the top and the tail is always at the bottom. This candle opens at the bottom, price may move down first, but then buyers take control and push price up strongly. The candle finally closes at the top, which shows buyers were dominant at the close. However, sellers were present initially, which is why this candle is bullish but weaker than a bullish tailless candle. In OTC markets, bullish headless candles work best in an existing uptrend or near support, and only with confirmation. Avoid trading this candle near resistance or without checking market context. Now let's understand the spinning top candle. A spinning top candle has a small body and wicks on both sides. The upper wick and lower wick are almost equal in size. This candle shows indecision in the market. Both buyers and sellers were active. Buyers tried to push price up. Sellers tried to push price down. But in the end, no one was able to take full control. That is why the body is small and the wicks are on both sides. Spinning top is not a buy candle and not a sell candle. It is an information candle. In a trending market, spinning top usually acts as a pause candle and the trend may continue. But in a ranging market, the same spinning top can lead to reversal. So remember, same candle, different market, different result. Never trade spinning top alone. Always wait for confirmation, market context, and next candle behavior. Now let's understand the inverted hammer candle. An inverted hammer has a small body at the bottom and a long upper wick. The upper wick should be at least 2 times the size of the body. This candle usually appears after a downtrend. Now understand the psychology. Price opened, buyers tried to push the price up strongly, but sellers pushed it back down. That is why we see a long upper wick. This candle shows that selling pressure is getting weaker and buyers are starting to step in. But remember one thing very clearly. An inverted hammer is not a buy signal by itself. In OTC markets, this candle only gives a warning. We always wait for confirmation from the next candle. If the next candle is bullish, then we can think about a call trade. If there is no confirmation, we skip the trade. Now let's understand the normal hammer candle. A normal hammer has a small body at the top and a long lower wick. The lower wick should be at least 2 times the size of the body. This candle usually appears after a downtrend. Now understand the psychology. Price moved down strongly. Sellers tried to push price lower. Then buyers entered and pushed price back up. That is why we see a long lower wick. This shows rejection of lower prices. But remember, a normal hammer is not a buy signal. In OTC markets, we always wait for confirmation from the next candle. If the next candle is bullish, then we can think about a call trade. If not, we skip the trade. Now let's understand the doji candle. A doji candle is a candle where the opening price and closing price are almost the same. That is why the body of the candle is very small or sometimes not visible at all. This candle shows indecision in the market. Buyers tried to push price up. Sellers tried to push price down. But in the end, no one won. That is why doji is not a buy candle and not a sell candle. In OTC markets, a doji is a warning candle. It tells us that the market is confused and a move can come next. But remember clearly, a doji candle is never an entry candle. We always wait for the next candle confirmation to decide the direction. Now let's move on to bearish candles. Bearish candles are exactly the opposite of bullish candles. In bullish candles, the opening is at the bottom and the closing is at the top. In bearish candles, the opening is at the top and the closing is at the bottom. In bullish candles, the head is at the top and the tail is at the bottom. In bearish candles, the head is at the bottom and the tail is at the top. Everything we learned in bullish candles applies to bearish candles as well, just in the opposite direction. If you understand bullish candles clearly, bearish candles will automatically make sense. Now let's start with the bearish Marubozu candle. Bearish Marubozu is exactly the opposite of bullish Marubozu. In a bullish Marubozu, price opens at the bottom and closes at the top. In a bearish Marubozu, price opens at the top and closes at the bottom. In a bullish Marubozu, buyers control the market from start to end. In a bearish Marubozu, sellers control the market from start to end. A bearish Marubozu has no upper wick, no lower wick. This means price moved only downward, without any rejection. This shows strong selling pressure. But just like bullish Marubozu, bearish Marubozu is not an instant entry candle. In OTC markets, if a bearish Marubozu appears near support, it can act as an exhaustion candle. So we always wait for confirmation. Now let's understand the bearish headless candle. A bearish headless candle is a red candle with no lower wick. In a bearish candle, the head is always at the bottom and the tail is always at the top. So when there is no lower wick, it is called a bearish headless candle. Now understand the psychology. The candle opened at the top. Price may move up first, but then sellers take control and push the price down strongly. The candle finally closes at the bottom, which shows sellers were dominant at the close. However, buyers were present initially, which is why this candle is bearish but weaker than a bearish tailless candle. In OTC markets, bearish headless candles work best in an existing downtrend or near resistance, and only with confirmation. Avoid trading this candle near support or without checking market context. Now let's understand the bearish tailless candle. A bearish tailless candle is a red candle with no upper wick. In a bearish candle, the tail is always at the top and the head is always at the bottom. So when there is no upper wick, it is called a bearish tailless candle. Now understand the psychology. The candle opened at the top. Price moved straight down. Buyers never pushed the price up. That is why there is no upper wick. This shows strong selling pressure from start to end. In OTC markets, the bearish tailless candle is stronger than the bearish headless candle. But remember, even a strong candle is not an entry by itself. We always wait for confirmation and check market context. Now let's understand the bearish spinning top candle. A bearish spinning top is a red candle with a small body and wicks on both sides. The upper wick and the lower wick are almost equal in size. This candle shows indecision in the market. Buyers tried to push the price up. Sellers tried to push the price down. But neither side could take full control. That is why the body is small and the wicks are on both sides. In OTC markets, a bearish spinning top is not a sell signal. It is an information candle. In a downtrend, bearish spinning top often acts as a pause candle, and the trend may continue. But near support or resistance, it can signal a possible reversal. So we always wait for next candle confirmation before taking any trade. Now let's understand the bearish inverted hammer. A bearish inverted hammer is a candle with a small body at the bottom and a long upper wick. The upper wick should be at least 2 times the size of the body. This candle usually appears after an uptrend. Now understand the psychology. Price opened and moved up strongly. Buyers tried to push the price higher. Then sellers entered and pushed the price back down. That is why we see a long upper wick and the candle closes near the bottom. This shows rejection from higher prices. But remember clearly, a bearish inverted hammer is not a sell signal by itself. In OTC markets, this candle is a warning candle. We always wait for confirmation from the next candle before taking a put trade. Now let's understand the normal bearish hammer, also called the hanging man. This candle looks exactly like a bullish hammer, but the context is different. A hanging man has a small body at the top and a long lower wick. The lower wick should be at least 2 times the size of the body. This candle usually appears after an uptrend. Now understand the psychology. Price moved down strongly during the candle. Sellers entered and pushed price lower. Then buyers pushed the price back up and the candle closed near the top. That is why we see a long lower wick. But here is the important part. Even though buyers pushed price up, the long lower wick tells us that selling pressure has started to appear. This is a warning candle, not a sell signal. In OTC markets, we always wait for confirmation from the next candle before taking a put trade. Now let's understand the bearish doji candle. A doji candle forms when the opening price and closing price are almost the same. That is why the body of the candle is very small or sometimes not visible. When a doji appears after an uptrend or near resistance, it is called a bearish doji. Now understand the psychology. Buyers tried to push the price up. Sellers pushed the price down. In the end, no one was able to take control. This shows confusion and weakness in buyers. In OTC markets, a bearish doji is not a sell signal. It is a warning candle. We always wait for confirmation from the next candle before taking a put trade. So that's all for today. We've covered bullish candles, bearish candles, and the psychology behind each one. Remember, candlesticks are not about shapes, they're about pressure and context. If you want to learn this in more detail, join my Telegram channel. I've shared a beginner to advanced PDF on candlestick psychology, where I explain how to apply these candles in the OTC market, when to use them and when to avoid them. The Telegram link is in the description below. In the next video, we'll apply all of this in live OTC trading. Till then, focus on understanding the candles. Don't forget to like, subscribe, and I'll see you in the next one.